Hello guys, my name is Michael and you're on the Traders View channel, and today we will talk about the new course of Federal Reserve System. The head of the US Federal Reserve, Jerome Powell, speaking at an economic symposium in Jackson Hole, stated that the Fed is ready to lower the key interest rate. This could indeed impact not only the stock market, but also the cryptocurrency market and even the price of Bitcoin. But the main question is, how exactly? Make sure to watch this video until the end, and I will tell you about the main scenarios for the crypto market, as well as share my forecast for the price of Bitcoin in light of the upcoming Fed policy. We will also touch on another important question: how does the interest rate affect the prices of leading cryptocurrencies, and why should both traders and investors pay attention to this? By the way, write in the comments what kind of policy you expect from the Fed by the end of this year. Will they continue to lower the rate, or perhaps leave it unchanged? Or maybe they will even try increasing it? Well, let's get started. So if you happen to miss the news, I inform you that the recent speech of the Federal Reserve representatives at the annual economic symposium in Kansas City and Jackson Hole, Wyoming, has revived investor sentiment in the stock market, and not without reason. The fact is that Chairman Jerome Powell said the time has come for policy to adjust in the context of lowering the key interest. He also added, the direction of travel is clear, noting that the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Let me remind you that at the meeting prior this speech, in July 2024, the rate was maintained at 5.5%. This is a relatively high value, and it should be noted that it has been held since July 2023. Thus, the current news signals possible changes in the Fed's policy in the near future. Why is this important? First, a bit of theory. As you probably know, the Fed can raise, lower, or leave the key interest rate unchanged. In short, the key interest rate is the percentage at which banks lend their money to each other. Therefore, if the rate is high, we practically get a more expensive interest rate on loans for businesses. The opposite situation, when the rate is low, indicates that loans for businesses have become more accessible. Thus, the key interest rate is often used as a tool to handle the inflation. However, the downside of this tool is the slowing down of the economy. For example, if a country has high inflation and authorities decide to raise the rate, that is, make the supply of fiat money more expensive, the value of the currency will become slightly higher, but loans will be taken out less frequently, which means the economy will slow down. The opposite situation, when the rate is low and loans are accessible, leads to business having cheap money and the economy accelerates, but inflation also intensifies. The target for inflation for the Fed has long been a level of 2%. It seems that the regulator is gradually approaching this target through a strict policy of high rates. And finally, discussions about easing monetary policy have emerged. By the way, write in comments what is more important for you: low unemployment rates and cheap loans, but rising prices, or low inflation. It turns out that the interest rate affects the value of the dollar. But what does this have to do with the crypto market and Bitcoin? To begin with, I want to note that while the US has experienced relatively high inflation for an extended period, the stock market has nevertheless been growing. This is clearly visible in the chart of the S&P 500 index, which is currently near its historical maximum and has previously risen, albeit with correction intervals. Why has the stock market risen? I believe that investors have been seeking refuge from inflation. By the way, the price of Bitcoin also rose around the same time period. I think that one of the many important reasons for the growth of Bitcoin and blue chip stocks was the weakness of the dollar and investors' attempts to protect themselves from inflation. Yes, some may rightly point out that there is no direct correlation between the S&P 500 index and the price of Bitcoin. It is also fair to know that these are completely different markets. This would be correct, but only partially. Don't forget that Bitcoin is no longer just a coin for some crypto enthusiasts that oppose all traditional financial institutions. We have financial instruments from the stock market related to Bitcoin, such as Bitcoin ETFs. Moreover, the same large institutional investors who invest in the stock market are also investing in cryptocurrency. Therefore, it is not surprising that the dynamics of these instruments can partially mirror each other concerning the US dollar. The downside of the situation, as I mentioned earlier, is that the economy slows down when regulators fight inflation. What could this lead to? In the worst case, to a recession and economic crisis. What scenarios do I see for the future? I remain a Bitcoin optimist in the long term and believe that any decision by the Fed will, in one way or another, benefit Bitcoin. I won't say it will benefit the entire crypto market. I'm talking here only about Bitcoin, and here's why. If the Fed begins to lower the key interest rate, more money will flow into the stock market and along with it into Bitcoin. This will also lead to another rise in inflation in the long term. And here is where Bitcoin comes in, as it rightly carries the status of digital gold. This means there will be those who view it as a safe haven asset for preserving their savings. Like this video if you also think Bitcoin is well suited for these purposes. On the other hand, if the rate remains unchanged, this could negatively impact both the stock and cryptocurrency market in the short term. Investors have already adjusted their plans for the reduction in the key rate. If a reduction has been announced, deviating from this is not likely to lead to something good. However, in the long term, maintaining the key rate, especially increasing it, poses a risk of recession. The situation here is twofold. On one hand, a recession and economic crisis almost certainly lead to a downturn in the stock and crypto markets. I even concede that if the S&P 500 declines and investors start pulling out their savings, the price of Bitcoin could also drop. But on the other hand, Bitcoin has historically experienced prolonged periods of crypto winters. Yes, recovery usually takes a long time, sometimes even years, but it has always rebounded. In the case of Bitcoin, this could also become an important reason for its greater acceptance as a safe haven asset. Let me remind you that this was the role envisioned by its creator, the mysterious Satoshi Nakamoto. I would like to point out that in the Genesis block of the Bitcoin blockchain, there is a reference to the headline of the Times from January 3rd, 2009, Chancellor on brink of second bailout for banks. This is a hint at the instability of the current traditional financial system. Bitcoin stands in opposition to it. Like this video if you want to learn more about hidden Easter eggs related to Bitcoin and other cryptocurrencies. In general, I remain optimistic in the long term. The worst we might face is a sales season for Bitcoin, but some will clearly view this as a good entry point for the long-term holding. After all, Bitcoin has been growing for a considerable time, and after the recent halving cycle, its supply has only decreased, which cannot be said about the US dollar, which is facing inflation. This was Michael with you today, guys. Stay tuned to this channel. Don't forget to like, push the notification button, and subscribe. See you next time. Bye.